Hi friends, in this video we are going to study second question of the 2015 Financial Management past paper. If you think this video is useful, please give a like and share with your friends. If you have any doubts, you can ask through the comment section and subscribe this channel. Click the bell button for getting notification of forthcoming videos. Okay, let's go to the video. According to the question, the first question is define the following terms. A. Operating cycle. We can say operating cycle is the time duration required to convert sales after the conversion of resources into inventories into cash. It is also called as gross operating cycle. Equation for the gross operating cycle is inventory conversion period plus debtors collection period. B part, net operating cycle. Net operating cycle refers to the difference between gross operating cycle and creditors payment period. We can calculate the net operating cycle. Gross operating cycle minus creditors payment period. The second sub-question briefly explain the factors which can determine the level of working capital. There are so many factors for determining the working capital. Those are nature and size of the business, volume of sales, manufacturing cycle, sales growth, demand condition and production policy, firm's credit policy, operating efficiency and performance, the finally seasonal fluctuation. Third sub-question, Star Garments Limited is a manufacturing company which produces a standard product. Following information is available. Budgeted annual sales are 24,000 units at a selling price of rupees 30 each. So the selling price per product is 30 rupees. Standard profit margin is 20% on selling price. So 80% is cost plus 20% standard profit equal to selling price. Cost of the goods sold comprises materials 50%, direct labor 30% and direct expenses 20%. Raw materials are kept in stores before issuing the production for 1 month. So raw material period is 1 month. Finished goods are in stock for 1 month before sales. Work in progress consists of 1 month production in terms of raw materials, 3 weeks in terms of direct labor and half month overheads. Debtors collection period is 2 months. Trade creditors are given 1 month credit period. Salaries are paid in the same month. Other expenses, overheads are paid in half month period of time. You are required to prepare the statement showing working capital needed. You may assume that production is carried throughout the year and wages and overheads occur similarly. Further, add 10% to compute figure to allow for contingencies. Okay, we are going to do the accounts. Okay, first we have to find the cost of sale. Now we have to find the cost of sales per unit as per the given information. Accordingly, selling price per unit is 30 rupees as per the question. Gross profit margin is 20% on selling price. So 30 rupees into 20% equal to 6 rupees profit. So now we can find cost of sales per unit. Cost of sales per unit, selling price per unit minus profit per unit. So 24 rupees is cost of sales per unit. Now we have to find the cost of sales. Each of elements, those are raw material, direct labor, overheads. Cost of goods sold comprises materials 50%, direct labor 30%, direct expenses 20%. So we can find the cost per elements. Direct materials, direct labor, overheads. %, 30%, 20%. Total cost of sales per unit is 24 rupees into 50% direct material percentage. So the direct material cost per unit is 12 rupees and direct labor 30% of the cost of sales. So direct labor 30% into cost of sales is 24 rupees. Therefore 7.20 rupees is direct labor cost per unit, and overhead percentage 20% on cost of sales. So 20% into 24 rupees, 4.80 rupees is the overhead cost per unit. Total cost of sales per unit is 24 rupees. Okay, now we have find the each of elements cost. Now we can do the accounts. Current assets, inventory value. First, raw material raw materials are kept in stores before issuing the production for 1 month, and production units 24,000 units annually. So 24,000 units into direct material per unit cost is 12 rupees into 1 month period, 1 divided by 12. $24,000. Work in progress. Raw material 24,000 units production per annually into 12 rupees cost per raw material into work in progress consists of 1 month production in terms of raw material. So raw material period in work in progress is 1 month. 1 divided by 12, 24,000. Direct labor 24,000 production units into direct labor per unit is 7.2 rupees into the period for the direct labor in the work in progress 3 weeks in terms of direct labor, 3 weeks. So 3 divided by 52. And overhead 24,000 production units into overhead cost per unit is 4.8 rupees. 4.8 into, as per the question, half month overheads. So 0.5 divided by 12. 4,800. So the total work in progress value 38,769 rupees. 2-3 cents. Finished goods. Raw material 24,000 units production into 12 rupees cost per raw material into, as per the question, finished goods are in stock for 1 month before sales. So 1 month divided by 12, 24,000. Direct labor 24,000 production units into 7.2 rupees direct labor per unit into 1 month. $14,400. And overhead value for the finished goods 24,000 units production units into 4.8 rupees overhead cost per unit into 1 month finished goods period, 1 divided by 12. So the value for the overheads in the finished goods is 9,600 rupees. So total value of the finished goods 48,000. Okay, now we have find raw material, work in progress, finished goods in the inventory, and now we are going to find debtors value. Debtors, as per the question, selling price per unit is 30 rupees. 24,000 units production units annual. Debtors collection period is 2 months. Okay, 24,000 production unit, that is selling units, into 30 rupees selling price per unit into 2 months credit period, 2 divided by 12. So the value of the debtors is 120,000. So now we have find inventory, debtors, and we are going to find cash balance, minimum cash balance. As per the question, no any cash balance, so cash balance is 0. Now we have find all the elements in the current assets. So total current assets is total current assets or gross working capital or gross operating cycle is total value inventory plus debtors, 230,769 rupees 23 cents. And we have to find the current liabilities. In the current liabilities part, we have to find the trade creditors. As per the question, trade creditors are given 1 month credit period. So 24,000 production units into raw material per unit cost is 12 rupees into 1 month credit period for the trade creditors, 1 divided by 12. So the balance for the total balance of the creditors is 24,000, and salaries are paid in the same month. So no arrears in the salary because salaries will be paid at the same month. Other expenses overheads are paid in half month period of time. Okay, other expenses overheads arrears half of month, 24,000 units production into overheads is 4.8 rupees into half month, 0.5 divided by 12. So the value of the arrears overheads 4,800 rupees. So total current liabilities value is 28,800 rupees. So now we can find the net working capital after deducting current liabilities from the current assets. Net working capital or net operating cycle or cash cycle. ₹201,969 23 cents. Additionally, we have to calculate the 10% contingencies on the net working capital as per the question. So 10% contingencies, on the net working capital into 10%, 20,196 rupees 92 cents. So this is the final answer for the question. Inventory, raw material 24,000 production unit into 12 rupees raw material per unit cost into 1 month credit period 24,000. And work in progress consists 3 elements. Those are raw material, direct labor and overheads. Raw material 24,000 production units into 12 rupees direct material cost per unit into 1 month credit period 1 divided by 12, and direct labor 24,000 production units into 7.2 rupees direct labor cost per unit into 3 weeks, 3 divided by 52 weeks. And overheads value 24,000 production units into overhead cost per unit is 4.8 rupees into half month production credit period 0.5 divided by 12, 4,800 rupees. Total work in progress value is 38,769 rupees 23 cents. And finished goods value, raw material 24,000 production units into 12 rupees raw material cost per unit into 1 month store period 1 divided by 12, 24,000. And direct labor 24,000 production units, 7.2 direct labor cost per unit into 1 month 14.400. And overhead value 24,000 production units into 4.8 rupees overhead cost per unit into 1 month period 9,600 rupees. So total value of the finished goods is 48,000. And the debtors value 24,000 production units, 30 rupees selling price per unit, 2 months credit period. So the value of the debtors is 120,000. Minimum cash balance, in the questions no any cash balance, so 0. So total current assets, so total gross working capital, gross operating cycle is 230,769 rupees 23 cents. And the current liabilities part, trade creditors is 24,000 production units into 12 rupees direct labor cost per unit, and 1 month credit period 1 divided by 12, 24,000. And the salaries are paid in same month, so no any arrears in the salary. So we are moving overhead value, overhead arrears 24,000 production units into 4.8 rupees overhead cost per unit into half month arrears, 0.5 divided by 12, 4,800 rupees. Total current liability value. So we can find the net working capital value, current assets minus current liabilities, or net working capital, or net operating cycle, or cash cycle. So value is 201,969 rupees 23 cents. And we have to add the 10% contingencies on the net working capital. 10% contingencies 20,196,092 cents. So total net working capital after added the contingencies is 222,166 rupees 15 cents. So this is the final answer for this question.